Hey there, traders. This is Shane in another video here. It's Wednesday, the 26th of October, and today was the big economic summit that has to deal with the Eurozone, the crisis that they're facing, and quite frankly, they have got to get their stuff sorted out. And I just saw some stuff come across the wires. It's like 4:41 right now in the afternoon, Eastern time, and I didn't really take a quick look at it because I'm pretty much, I'm done trading. My day was, this morning. But there was some sort of agreement that was being reached, and I'll read about that later. Just want to cover a few things here. I made a video yesterday just talking about when you pick these areas, how fast these moves can happen. And this video is going to talk a little bit about that. And yesterday's highlighted a trade. Even though I traded today, this is not going to highlight a trade. It's going to highlight something different. All right, there's no sense in me just showing you trades. It's for what? But I had a comment yesterday. Someone had made a comment that, this move up occurred because we had broke a swing high, which was right here. There was a lower high over here that this had broken. So, a move up was, in the cards. Well, that's all theoretical. When you look at trading from that standpoint, markets make higher high, higher and low when they're going up. Of course they do. If I'm going up a set of stairs, I have to go one higher to make an up move, right? To get up the stairs. That's logical. But that doesn't drive the market. All right? Just because you see a higher high, higher low doesn't drive the market. Moving average crosses, they don't drive the market. What drives the market are buyer and sellers, right? Liquidity, that's how price moves, right? Filling up the orders, right, at different price points until the orders are filled. Pretty much, it's a basic 101-1 look at how the markets work. Don't get too off topic here. So what had happened was I had taken this short yesterday, and I had shown that in the video. And, I kind of made some blunders yesterday. Just my focus was all over the map. But got this move up. And here's the deal. Yesterday this move was down through the Eurozone, right? And the reason it was down is just because it was kind of the news that was coming out of there wasn't very good. I'm not talking the big GDP reports, et cetera, et cetera. I'm just talking about rhetoric that comes across on the news wires. It was down, right? So selling, it popped in, did what it did up here, and then dropped. Now this move up had nothing to do with the market making a higher high over here. It had nothing to do with that. What had happened was, in this area right here, there were some positive earnings coming out, and risk was back on for a little bit here. And if you look at these this down move here, there's a lot of gaps up here that could be filled up. Now, don't think of gap as in a gap in price like we're normally used to seeing it, right? When from Friday night to Sundays in a forex market, that's when you get your gaps. But it just talks about the big rushing move down. It takes away all the orders in through there, so the move back up is can sometimes be really clean. So what happened was sentiment was up on the day, right? What a great place to buy in this cluster right here. There's a lot of orders going back and forth. If you're a big time trader and you're moving huge amounts of cash, you are not going to be looking to fill orders in through here, right? You can be looking at these pockets where there's a lot of orders, and the liquidity is pretty good. And that's what happened. That's how that's played out yesterday. So I just want to make a quick note of just saying that just because these are making higher highs and higher lows, et cetera, that is not what drives the market. All right, that's what the textbooks will tell you. They'll tell you all that kind of stuff. But the fact of the matter is that's very theoretical. All right. And when I want to talk about mechanical trading, when I say the word mechanical trading, I'm not talking about having some indicators on your chart and just, pushing the buttons when it tells you to push the buttons. That's not what I'm talking about mechanical. I'm talking about the mechanics behind the markets and how they move. And so don't confuse the two when I do say that word, mechanical. All right. Just knowing the basics of the market. So let me just talk a bit more. We saw this price coming up, bouncing down. So we know what's happening up in this area right here, right? We know what's happening. We're getting some stops up here for people that have gone short. Now people are going to see this little spike up here and say, oh, look at this. It was a fake breakout. Then we had a fake breakout down here. No such thing as a fake breakout, right? Either markets break out or they don't break out. This was not really a breakout. What this was there was some a piece of good news came out, so it brought some buying into the market, right? But what a great time to run the stops that are above here, and that's how that was. And I'm not talking that was the broker. It wasn't the broker that was doing this. Is the traders that know what they're doing. They ran the stops that were just above this area right here. And why would they do that? Well, what a great way to get into positions, right? You know, to get out of their shorts, what are they going to need, right? They're going to need people to they're going to have to buy their way out, so they need someone to sell that to. Anyhow, all this was a stop run. When you hear about fake breakouts, when someone says, "Oh, it's a fake breakout," there's no such thing as a fake breakout. All right, that's no, there just isn't. Anyhow, so what am I talking about now? I know this video is all over the map. You see, the problem is when I'm talking about this kind of stuff, it's not as easy as saying, okay, when the 20 crosses the 50, we're going to buy. You know, it's not as simple as that. There's more to it. So basically, what's happened here? We know we're going into Wednesday. We know the market's probably going to range, right? A lot of indecision going on. Some good news here. Drives the price up, takes people out, right, and then drops like a rock. Drops like a rock. I also want to point out. Let me slide this down a little bit. This big blue line. It's the 1.4000 level. What is that? That's an option. Now, what's in there? What's there? Right? Protections of that options. So what are you going to get when price gets pretty close to it? Defending of the option, right? It's that 39.77 roughly that the top of this came in and the market dropped. Now what do we have here? Well, now here's your double bottom, right? So what are you going to get every time, you know, it makes this bottom here? People go long, right? Stops are underneath here. Bounces down here, people go long. What's underneath there? Stops, right? Nice build up of stops. So what happens here? Comes down, boom, clears the stops out, and it goes back into its little range. See how fast this move happened? This was pretty quick. This is a 177 pip drop from point to point. You know what I'm saying? So if you know what you're looking for, getting into these kind of moves, getting these kind of moves, their risk on these, and I mean the risk of failing, are pretty low, and you can be pretty generous with. I don't want to put the wrong impression out there, but when you have something that's, you know, it's got a really high percentage of at least giving you some profit, that you know, some people change their risk a little bit more. I know some people that trade this, and they're risking about 10 to 12.5% of their account, because when you know what you're looking for, the odds of it failing are pretty slim. So what happened here? So what we got is we got some news came out, right, across the wire. Once again, it's not news that's saying, hey, the GDP was bad or the non-farm payroll was bad. You know, that's what everyone looks at. You hear people say, well, I don't worry about the news. I just don't trade it. Well, that's a good thing to do, but it's nice to know what's coming across the wires and what effect that can have on price, because that can change sentiment. You know, there's long sentiment and there's short-term sentiment, depending on how you're trading. You know, you're going to be wanting to maybe keep your eye on that stuff. So what happened here is this nice move up, right, was on good news, right? But look what happened here. Deadlocked, rebond losses. This was early in the morning. Not early in the morning, it was like 9:20ish. This was coming across. So what does that happen? What does that mean? They're deadlocked. Is that good news or is that bad news for the euro? And if you're saying good news, you'd be incorrect. This is bad news, right? It's uncertainty. It's like, oh no, now what? Now what's going to happen? So what do people do? Well, what happens? Right? The risk is not like it was previous, right? People don't want to be involved in that. So what do? They get out of it. What a great place to get out, right through this area here. Take out these stops and go back into this range. So there's a couple of points that I would, I hope that you can take out of this video. And one of them is, you know, it doesn't hurt to have your ear open to to news. When I first started trading, it was like, news came out. I just stood aside, and then went back to my trading. Problem is, sentiment changes on something like this, and it's nice to have your third eye looking at it and saying, okay, well, this is what I can expect to happen, mixed in with how the markets and how price changes can really take your trading to a whole new level. Now, what else did I want to make sure I want to cover on this? This was a good example right here of a change in sentiment and how this basing here and then a nice move up. The sentiment changed, and you can say, well, yeah, I can look at the chart and it changed. But you can also know that beforehand and what to expect. Now, quite frankly, if we look back to the other video I did, the Aussie US trade. Let me see if I can grab a chart for that 1 second. All right, here's the Aussie US chart. If you look at the other video I had, you remember I had an order placed just above the 0500 level. I think it was 0509 or 510. What I was hoping for was a pop up. Now, what happened is I saw this big run up, right? When this usually happens, well, people are buying, right? To get into this, brings the newbies in, right? The amateur traders, the people who just look at this stuff and trade on emotion and jump in. They don't know what's really going on here. It rushed up to the 0500 level, and I wanted to push through and trigger some stops to get my entry a little bit higher, and then I expected a big move down. Thing is, the big move happened, but it just didn't have me on board, which is kind of rough. But that's all part of the game, right? It's all part of the game. So the takeaway from this. Takeaway from this is, number one, don't get too caught up in the whole theoretical stuff of higher high, high and low, the probabilities that there's going to be move up. No, that doesn't really mean anything, because you see what happened here. We ranged, right? Using that logic, this thing should just fly up. Double bottoms, right? They get breached. And quite frankly, if the news that came out, if the earnings didn't come out as good yesterday U.S. session, what do you think would have happened? Do you think this would have kept on going? No, it would have broke through, right? No doubt. Sentiment was still down, right? And if there's no good news, there's no good news. And just taking advantage of some stop placements, that's all. And so eventually what happened is I did come back here, but I got my original trade was taken out up in this area right here with about 20 odd pips of profit. And I missed the 110 pip move, but all that was made better today. So number one, keep your eye on the news, right? It doesn't hurt to take a look at what's going on, right? It doesn't take a look, hurt to take a look, Bloomberg or Reuters, whatever you want to take a look at. Because when this came out, deadlocked rebond losses, right? When that was being talked about, when being bantered about, well, that was pointing to one thing. And with this option up here, you didn't know, but the probabilities were pretty great that the market was going to drop, and it certainly did after taking out these stops here and cashing some people out of their position. So that's it. Talk to you soon. Thanks.